Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 3rd of November. All right, now just a bit of a recap of what you've missed if you're just joining us. Now, yesterday's RBA meeting, no change of rates as expected, but they were somewhat dovish with their statement and the comments afterwards. And that's sort of a nice, easy move. It's probably one of the nicest, like just normal market moves I've seen in a long time. It was around 75.20 at the time. Drifted down to that support trend line, danced around there for about an hour or so, then down to the next trend line and down to 74.20. So the sort of writings on the wall now, when it comes to the central banks, this is going to be obviously quite important for the FOMC. There's usually one central focal point. And for me in the RBA, we're looking for, okay, all the other central banks are bringing forward their forward guidance on potential interest rate changes in the future. Now, that to me was the major focus. So everything else they talk about and do, it sort of adds a little bit of flavor. But if they don't do anything like that, like all the other central banks, it's dovish and it goes down, right? Because they did sort of signal they weren't going to hold the bond yields down and all this sort of stuff, you know, which could mean, okay, the bonds are going to come back, interest rates a little bit higher, but it wasn't. It was all about the forward guidance. There was none. They're still looking at 2024. So the Aussie comes off. So that's what we've got today, because that's important to understand that, primarily because today we've got the FOMC meeting. Okay, it's going to be very important for all markets, equity, bond, and currency markets. No change of rates expected, but what we are planning on or banking on is the Fed finally coming out and saying we're going to start the tapering of asset purchases, right, bonds, etc. And this is the date we're doing it. If they don't give us a date, that's going to be a negative for the dollar. The market is anticipating, and if anything, has factored in that they are going to mention a specific date, whether it's January, December, or whenever it is. They've got to give the market a specific date. If they don't, the dollar has a chance to roll over once again. If they do set a date and they sort of still focus on employment, well, then obviously that ties in Friday's non-farm payrolls, and we'll have something else to look forward to after the FOMC is delivered. So that's where we are. It's all about this anticipation. Now, just coming back, just wanting to get back to touch, there's a few things coming out before this. We did see the Kiwi employment numbers come out, much better than expected. Kiwi popped about 20, 30 points. Not enough to turn this current move around, sorry. So it's popped up to 30, back down to 71.21. Just got one of my screens behind the another one there. But as we come through the day, right, so all these currencies are starting to kick into gear. The central banks obviously getting geared up. The Bank of England, don't forget, Thursday. We've got nationwide house prices out of the UK, Eurozone unemployment. I think now that we've got momentum in the currencies, this is where this data is going to really come into play. You've got the factory orders, some PMI data, but really the factory orders is probably the key to it before the FOMC, and the non-manufacturing ISM numbers as well, right? You'll be having a look at those and you might see some sort of small movement. The market is not going to move aggressively, right, ahead of the FOMC release, right? So if you're sitting there banking on some big move on the ISM non-manufacturing numbers, you're going to need some exceptional levels of variance to get it moving ahead of the big announcement, which is the FOMC, right? And don't forget the press conference afterwards. As I said, there's lots of tangible things happening at these events. The interest rate decision, no change, statement, this is what we're going to do, and then potentially a press conference and Q&A afterwards. So it's a bit of a sequence of events. You need to get yourself tuned up for, like, it's not all going to happen just at once. But as I said, the key focus for me is the forward guidance about the tapering, starting that, giving us a date. That's dollar positive. But once again, this is already sort of banked into the bonds and everything else. So even if they do give us a date for the tapering, I don't think we're going to see a dramatic move in the dollar. We'll see the dollar start to edge higher, but the big danger is they don't give us anything and the dollar comes off. That's where the risk is, right? At the moment, right, just looking at the currency pairs, you can see where the momentum is. And there still is a bit of discombobulation with the dollar block. Okay, Euro, Sterling, Aussie, Kiwi. Now, Aussie and Kiwi were up about 4% for the month. They have to catch up to Euro and Sterling, and they've done a fair bit of that today or yesterday. right? Sterling looks like it wants to head south. Of course, the Bank of England Thursday is going to be key to that. The euro, I mean, it's quite amazing that it's actually bounced back to these sort of levels, right? If anything, it's bounced back to levels to sell, right? So looking at the US numbers, the FOMC obviously as well, like the momentum is all downside once again, strong dollar. We just need the FOMC to come to the party. Also, it'd be great to see some of these US numbers, these peripheral second tier numbers like the ISM non-manufacturing, US factory orders, sort of contributing, right? Just being as expected or a little bit better sets us up for an easier dollar move. The dollar block, and this is what's happened over that last week. You remember the dollar was just falling. It wasn't really, I think it was just more portfolio adjustment. We've now got a situation where all those dollar longs were flushed out, right? Now we're starting to see these new positions come back on, and it could be significant from here, especially if the FOMC is really starting to move. Give us some dates. They're well ahead of any other central banks, so it makes sense that the dollar rallies. All right, and that's pretty much where we are. It's a wait and see. Now, trying to trade around this with pending orders is an absolute mistake, right? Just take it easy, see what the outcome is. You're really looking for your breaking news to see what they're doing as far as tapering. As I said, the date is the key, or any date, and that gives us the dollar move and or just keeps the current moves going as well. Outside of that, as I said, just to reiterate, if they don't give us a date about the tapering, I think that's a bit of a negative as far as, you know, managing the economy and all this sort of stuff. It's another false start. Should see a lot of dollar long positions unwound. I don't think it'll happen, but that's the risk on this opportunity. All right, guys, all the best. Cheerio.